number one chart is Bitcoin in profit. We see the date on the x-axis, the price of Bitcoin on the y-axis as usual, and then on the color overlay, the percentage of Bitcoin in profit. And it can be 100% in the bull markets and at the top of the bull markets especially. And it can be as low as 60% or actually 50% in the bear markets. And I made the cutoff point at 60% because it shows better the patterns that are in those signals. Now, we're looking at the on-chain Bitcoins. It's all the 19.3 on-chain Bitcoins, no paper Bitcoins, so no Bitcoins on exchanges, which are basically IOUs, and no Bitcoins in derivative instruments like futures and options, only on-chain real Bitcoin. Now, what we see as very important is that the percentage of Bitcoin in profit flipped from 50% to 72%. It already did that in January, but February continues that signal. And we can look up in earlier periods like 2011, it did the same thing. It flipped from blue to green, from like 50-60% to 70-80% profit. Same in 2015, 2019. So this is a very important signal, and what it basically means is that all the buyers from 2021 at 40, 50, 60K, they're basically gone, and they have sold to buyers below 20K. And that's a lot of Bitcoin. That's actually 5.5 million Bitcoins that changed hands from a losing position to new buyers in a fresh position. And those new buyers, those 5.5 million Bitcoins, are now in profit.
The crypto market is down today as Bitcoin and altcoins corrected after Fed FOMC minutes hinted at further interest rate hikes if high inflation persists. Hello and welcome to Money Talks. In today's video, Plan B updates about Bitcoin's current market standing, the final bottom in crypto, and his outlook for Bitcoin in 2023.
The S&P 500. And we talked about this chart before, but we'll do it again because it seems that the main bear argument is macro uncertainty with inflation and recession and the war. So the S&P is basically a proxy for macro, because stock investors, they'll price in all the expectations and all the information out there on inflation, recession, what the central banks are doing, what the potential war is going to be. So all that is priced in by the stock market, and the stock market is big, so it's a nice proxy, and it's always good to know that everything out there, all the macro information, is already priced in the stock market. That's your assumption. It's called the efficient market hypothesis, by the way. So it's always a good assumption. And I'll for sure make that assumption. Now, stocks bottomed here in October already, and Bitcoin bottomed a little later in November. So there's a little lag. It seems that the stock market is leading the Bitcoin market, which would be logical because the stock market is, I think about 20 times, or maybe more, about 200 times bigger than Bitcoin. So, and we see in earlier days that same lagging period. So in 2011, there was a dip in the stock market, and then a bottom, and a later bottom in Bitcoin. Same in 2018. There was a bottom already here in the stock market, and later in the Bitcoin market. So there is this lag, and in my opinion, the Bitcoin has some catching up to do with the general stock market, and the implied Bitcoin price from that stock market is about 55K.
The crypto market is down today, as market volatility increased and investors digest the Federal Reserve's minutes, which indicate that interest rate hikes could extend for longer than most investors expect. The downturn comes after the Feb. 14 Consumer Price Index, CPI print, showed higher than expected inflation, along with increased regulatory enforcement from the United States Securities and Exchange Commission, SEC.
Stock-to-flow model. Very interesting chart right now because, well, as you know, stock-to-flow measures scarcity. It's about the 21 million Bitcoin cap. There cannot and never be more than 21 million Bitcoins. Not even one Bitcoin for every millionaire in the world. It's really scarce. And this model uses that stock-to-flow ratio, of course, to model the Bitcoin value. And, well, one important thing to notice is that value is different from price. So the gray line is the model value, and the color dots are the Bitcoin price. And price is different from value. It can be below the value line, like now. It can be above the value line in the bull markets. And well, that's in fact what the error is pointing out. So the error, is the Bitcoin price divided by the stock-to-flow model. So right now, the Bitcoin price is about 20, and the Bitcoin stock-to-flow model value is about 60. So 20 divided by 60 is 0.3, and that's what this value is. And for example, if we go to the all-time high in 2013, the price was 1,000, and the Bitcoin value, or stock-to-flow model value, was about 100. So that's a 10x above the model value. So it can be below, it can be above. That's not a problem. Now,
the primary downside catalyst of the day appears to be investors' concerns over enforcement action against the crypto industry. The recent SEC crackdown on Paxos and Binance and enforcement actions centralized exchanges offering staking as a service was followed by $32 million in digital asset outflows on Feb 20. For the past few years, the cryptocurrency industry and regulators have along either due to various misconceptions or mistrust over the actual use case of digital assets. After the FTX implosion, some feel U.S. lawmakers are angry with the crypto industry. The most recent battle is centered on how centralized exchanges, CEX, can use customer funds. On Feb 13, Gary Gensler, the SEC chair, issued the following warning. If this field has any chance of survival and success, it's time-tested rules and laws to protect the investing public. Don't have your hand in the customer's pocket using their funds for your own platform.
What the future will bring, I don't know. I do expect the Bitcoin price to go to make a reversal back to the stock-to-flow and the time model levels. But we can also see the hash rate going up, increasing dramatically. I wouldn't be surprised at all if that happens. So we'll track those. For sure, the models have stayed close together, especially in 2011, 2013, and 2017. Coincidentally, also the all-time highs of the bull market at those times. But the models can also be very much apart from each other, like 2012 and 15 and right now. So, well, that makes it very exciting what the future will bring. Again, I don't think the Bitcoin price will reverse back to the stock-to-flow and time model values of around 100,000, or even after the halving, more than 100,000, between 100,000 and a million.
So, what are your thoughts about Plan B prediction? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.